This is a summary and a selection of stories from the Financial Times published Monday, the 4th of August, 2014. The chief executive of General Electric has warned that the decision of the US Congress to close the country's Export-Import Bank would damage American groups doing business in Africa. The warning comes as President Obama welcomes nearly 50 heads of state from Africa for the first summit between the US and Africa. The White House said that its key objective is to increase trade between the US and Africa. General Electric is likely to be one of the Obama administration's biggest participants in the Power Africa initiative to provide $7 billion for African energy projects over the next 5 years. Supporters of George Osborne and Boris Johnson are increasingly convinced that David Cameron will not continue as Prime Minister beyond 2018. Although Mr. Cameron insists he will seek a full second term, allies of Osborne and Boris Johnson say both men are assuming Cameron will step down after his planned referendum on Europe in 2017. They would be two of the frontrunners in the leadership contest, along with Theresa May. One Downing Street insider said that Cameron looks at Margaret Thatcher and Tony Blair, and he sees how things start to go wrong after 7 or 8 years. He has a sense of history, the insider says. ISIS insurgents in Iraq have seized control of several northeastern enclaves that have been controlled by Kurds. They have seized an oil field and access to the Mosul Dam. This marks the first time Kurds have lost territory to ISIS. The ISIS threat seems to have drawn together Syrian and Iraqi Kurds. The shale revolution that is supposed to have liberated the US from Middle Eastern oil has had consequences on Africa. US oil imports from Africa plunged to a 40-year low, and the most important link between the US and Africa has thus been weakened, just as Washington launches the first US-Africa summit this week. The Nigerian oil minister identified shale oil as one of the most serious threats of African oil producers. Until 2013, the US was Algeria's biggest oil client, but in a single year the trade has collapsed to a quarter of its previous levels, with Spain, France and Italy filling the gap. What should be noted is that despite the US's pullbacks, the biggest US energy companies like Chevron, ExxonMobil, and smaller groups like Anadarko continue to invest in Africa. There is mounting evidence that European companies have returned to a reasonably healthy rate of earnings, with growth in the second quarter, said Matthew Garman, European equity strategist at Morgan Stanley in London. UK oil major Shell and French car maker Renault were among companies announcing a rise in profits in second quarter earnings. Eni, the Italian oil and gas group, announced a 51% increase in its quarterly net profit. But Renault's results also pointed to two trends likely to keep a cap on future profitability. Despite improving economies in Europe, the impact of a slowing Russian economy and falls in emerging market demand will impact growth. BP, which owns nearly a fifth of Rosneft, the oil group that is majority held by the Russian government, was another European company to warn that its increased profits in Russia could be hit by the growing push for tighter sanctions. BTG Pactual, a Brazilian bank, is weighing a possible acquisition in Mexico and planning to almost double its commodity business as it looks to become a global bank. After closing a deal to buy Swiss private bank BSI for $1.7 billion 3 weeks ago, BTG's billionaire controller Andreas Steves has told the Financial Times he is now considering a deal in Mexico. While US and European banks are largely retreating from commodities, Mr. Steves said he saw the business as a natural fit for a bank based in Brazil. After raising close to $2 billion in an initial public offering in 2012, BTG has been on an acquisition spree across Latin America and beyond, as rising regulatory pressure on US and European banks has enabled it to snap up assets, including BSI, at heavy discounts. It's not exactly Robocop, but it is a robot security guard, and it could be patrolling office floors within 10 years, according to G4S, the world's biggest security company. G4S, which guards everything from Baghdad airport to oil pipelines in Nigeria, says the advantage of robot security guards is that they can analyze screens and data almost continuously, whereas humans tend to lose focus. Robots are also cheaper and can work without breaks in hazardous environments. They cite research that says that people monitoring security cameras miss 95% of activity after 22 minutes. They state that people can't concentrate on cameras for very long, but a robot can, and it can learn what's normal and abnormal. Technology has become an important focus for G4S as it attempts to turn around the company after a difficult 2 years that began with its failure to provide enough security guards for the London 2012 Olympics. One of China's largest asset management companies is to enter the US market in response to a rising competitive pressure in its home market. eFund Management, China's fourth largest asset management company, with a $40 billion of assets, has partnered with US passive fund house Crane Shares to launch a fixed income exchange traded fund in the US. Deborah Furr, managing partner at ETFGI, the data provider, said that there is likely to be interest in the Chinese fixed income ETF, as it will be a unique product. Many Chinese fund houses are examining expansion opportunities overseas due to rising competition between local groups from domestic assets, according to Mr. Ko. He added that expansion of Chinese RQF2 scheme, which enables overseas asset managers to invest in mainland securities, has added to competitive pressure. Lloyds, the UK bank, has experienced a huge appetite for its first environmental, social and governance bond, which ticks all the boxes for asset managers trying to boost their responsible investment profile. It is marked as excluding some categories that are considered unethical, including tobacco and firearms. Much of the interest in ESG investments may be attributed to the increasing number of investors signing up to the UN's Principles for a Responsible Investment. Asian equity manager Hugh Young has been trimming his exposure to India in his flagship £2.2 billion Aberdeen Asia Pacific Equity Fund. However, Mr. Young, who runs Aberdeen Asset Management's business in Asia, says he is skeptical about the euphoria that has surrounded Indian equities in the recent months, even though his funds have benefited. Mr. Modi is widely expected to institute sweeping reforms in areas such as infrastructure and power generation, prompting investors to buy into India in anticipation of these improvements. But Mr. Young warns that investors may be succumbing to excessive optimism in terms of the expected pace of reforms. Mr. Young adds that the first budget from the new government has been deeply dull, very conservative, and does not outline much in the way of reforms. The fund has also benefited from its overweight position in Indonesia, which is the top-performing market in the Asia-Pacific region this year. But Mr. Young warns that Indonesia is another country in danger of succumbing to excessive optimism, now that Joko Widodo has won the presidential election.